Real talk. Real topics. Real solutions. This is MSR ForeFront with your host, Stephanetta Harmon.
Good evening, everyone. Let me make sure I'm looking in the camera here. Good evening. Hi, how are you? I am Stephanetta Harmon. I am your host and moderator this evening for the MSR ForeFront, presented by the Minnesota Spokesman-Recorder. Thank you so much for joining us tonight and tuning into our latest edition where we have this ongoing roundtable discussion series addressing issues that are pertinent to Black communities in Minnesota and beyond. And tonight we are talking money, finances. How do we secure the bag? How do we build wealth? How do we even know where to begin in leveling a playing field that has skewered so much to the Black community in Minnesota and beyond? And tonight we are joined by Trent Bowman, who is the Vice President of MidWestOne Bank. And we're going to start off the conversation because we're going to bring someone else on in a little bit as well. But we're going to start off the conversation with housing, which is we continue to hear is the number one, one of the number one ways for us to start building wealth in our families and for long-term stability. How are you today, Trent?
I am doing fantastic, and thank you for having me.
Thank you. Okay, so Trent, can you look, this is how we do. I like to call the MSR ForeFront the kitchen conversations because I want us to get real into conversation. I don't want that whole, here's my prepared speech. I want that stuff that we're going to sit, we're drinking, we're sipping some tea, some wine, and asking real, getting into real talk. So my first thing though is, can we get this volume situation on your we're getting a little bit of feedback here.
Okay, how about that?
Let's see how that's doing.
Testing 1, 2.
That sounds, let me see when I come through. I think perfect. Okay. I think that's better. And as we go through the night, if it gets a little bit, we'll adjust. And so we want to just talk housing, right? What is your role? Because when I met you a couple years ago, you were in the thick of it, telling us how to get homes and how it could be more than a dream. So, what is your stake in terms of getting Black ownership, home ownership up? Where you see us now, and why are you so passionate about getting us to own homes?
Great question, and my passion is still there. And my saying is, since we're just talking, is your dream home is your home you can afford. And that statement came about many years ago when I was originating. I would do one-on-one consultations with potential first-time home buyers, and everybody wanted this dream home. They wanted the white picket fence and the 3 bedrooms and the 2 bathrooms, the 3-car garage, but you only have 1 car. They just wanted all the amenities, to their dream home. And but their income and their debt position and their lifestyle, really could afford them to buy a dream home you can afford. So what I mean by that is sometimes we have to take away some of the amenities that we want. And I'm not saying we can't get it, but sometimes it just takes time. And as a community, from being in this industry for so long, is that we want all the bells and whistles like right out of the gate. Instead of saying, okay, how can I get the 3-car garage, the 3 bathrooms, the 4 bedrooms, etc., and start building equity? So let me buy that starter home. Let me buy that first dream home. Let me buy the home that's going to allow me to maintain my lifestyle, that's going to allow me to continue to save money, that's going to allow me to keep my kids in extracurricular activities, whether they're in AAU sports or gymnastics or baseball or computer classes or fine arts or what may have you. Because when we buy houses and we're house poor, the chances of us losing those homes are so much faster. And in order for us to change that narrative and move the needle of home ownership, especially in the BIPOC community, we just have to start making some changes and build into that next dream home. You have your starter home, that's your first dream home. As you build equity, you take the equity from that home, put down on your new home, and start building in that level.
Awesome. So what I'm hearing is that we are buying homes that we can't afford because we are getting approved or thinking bigger than what our pockets are really allowing us to do. So they said you can get a $300,000 loan, but you really can only afford maybe a $150,000 because you're not taking into consideration all the other expenses that go with it.
But Stephanie, I'm glad you brought that up, because that to me is really a key element in home purchasing. And this is one of the reasons why I'm always telling potential first-time home buyers, sit down and do a consultation with a loan officer. Understand what you can afford. Do a budget. Because buying a house is like, if you want to be a business owner, and if that is one of your desires or your dream is to be a business owner, well, I'm getting ready to let everybody in on a little secret. When you buy a house, you become a business owner. And I call it House Inc. Because you need to be able to understand what you can afford, what you can manage, how you can maintain that house. And just because a loan officer says you can qualify for a $300,000 house, remember this, my friends out here, we're going to qualify you based on your gross income. But you pay your mortgage payment, you pay your debt, you pay your utility bills by the net, by the take home. So when you're buying a house, you really have to be true to yourself and understand, again, what is that dream home I can afford. So we're not, so don't get caught in that lingo with these, certain loan officers or real estate agents, telling you, oh yeah, you can buy this $300,000 house, because at the end of the day, who's making that mortgage payment? Not that loan officer, not that real estate agent, but you and maybe your significant other. And the last thing you want to be is house poor. So yeah, you can, again, I like to call it the hollow house and the house of substance. The hollow house is, again, you got qualified for $350,000 and you bought that $350,000, you got all the bells and whistles, but it's empty. It's empty. It echoes, because you can't do anything. You can't afford anything. You can't do the things that you enjoy doing. So what happens is, if you're married, y'all start bickering because one wants to do something and the other one's looking at the other one like, hey, you want a happy hour? Where'd you get the extra money to go to happy hour? So we gotta be careful. And the other thing, when we're buying houses that are more expensive, beyond what our affordability level is we don't think about that house debt. When you sign your mortgage and you sign that note at the closing table, you're going to inherit house debt. And house debt is all the stuff you don't see coming. House debt is that furnace you didn't see going out, that water softener. What happens if there's a flood in the basement and your insurance doesn't cover that? So, you got to think about that house debt. And that's why I say there's the hollow house, excuse me, and then real quickly, there's the house of substance. And that's the house you buy based on your budget, based on your affordability, based on the extracurricular activities that you have for your kids. That's based on your life and your substance and being able to maintain and save. What is the purpose of buying a home if we can't save for the future? If we can't save for challenges that may come up, and we will have challenges in the future when you become a homeowner. So that's why it's very important to meet with your loan officer and have that one-on-one consultation. Have a consultation with the real estate agent, because you want to know if they got your best interest. Are they trying to build a relationship with you, or are they just trying to get a commission check from you? It's a big difference. Commission check, relationship, because I believe when you work with somebody that's building a relationship with you, to me, I like to call that residual income in a different way, because if you're working with someone and they got your back, and they really want to put you in that right product, what are you going to do? You're going to tell other people about that individual. If you just want to just get a commission check, hey, you're going to close the deal, but you ain't going to tell anybody else about that person. And we all know how news travels in society.
Mm-hmm. I hear you 100%. And we're talking, you know, wealth generation, right? Building generational wealth, building, leveraging our buying power, increasing our economic status. And we have Kenya McKnight-Ahad. She is the CEO, founder of Black Women's Wealth Alliance. I also call it the Health Alliance. I know I mess it up every time because I feel like wealth is health and health is wealth. So we're going to welcome her into this conversation. Thank you so much. I know you just hopped off a plane.
Hopping on.
Hopping on a plane. See, look, hopping on a plane. So she has taken time out of her schedule to hop on and really talk about the work that she's doing. And, you know, if we're talking housing as a way to build generational wealth, she has a structure for Black women to build that generational wealth through cultural competency and literacy. So can you tell me a little bit about what you're doing and how you are in this conversation, or how we get our lives together?
Yes, ma'am. Good to see you both. Thanks for having me. Can you hear me okay?
Yes.
You can. So we do cultural wealth education through a program called Queennomics. It's a 5-week cultural, it's basically designed to teach Black women about, you know, how to use our money and how to really develop financial consciousness, strategies two, and skills to take advantage of, you know, building a good future for ourselves so that we can invest in generational wealth. And Queennomics goes over the history of Black economics, collective and individual financial trauma in the Black community, also the financial character of Black women, as well as wealth building 101, financial planning, and goal setting. So that is what we do over a 5-week. We actually just piloted Queennomics in 2020 with 39 women who all successfully completed it. Prior to that, we ran our own cultural wealth school that we created called the Wealth Academy from 2018 to 2019, graduating 130 Black women out of the school.
That is amazing. In that work that you're doing, so we're hearing on this one side, what's the one we're hearing from Trent, like the biggest piece of education is to make sure that you can afford what you're stepping into. What is the biggest piece of education that you're seeing that you have to impart on the women that are coming to you? Like the most common pressing issue that if we get this right, we might be able to get somewhere.
Yeah. You know, impulse, you know, just managing the impulse. Budgeting is huge. Most of the women have never done budgeting. We shop off of our senses and, you know, that sort of a thing. So budgeting is critical, and knowing what to put in your budget, you know, so like, and we have our financial toolkit. It's called B Financial Tools. And so like we got hair weave in there, makeup, you know, tobacco, whatever. So, you know, just to help people understand that all these little things go in your budget, right? So budgeting is huge. I think the other piece is knowing our financial power. Most people do not know our financial power. So when I tell them that Black women control nearly 60% of the Black dollar, they're just like, what? When I tell them that prior to COVID, I don't know what we looking like right now, but the $1.4 trillion spending power that was projected for 2020, I think we're shocked because we, you know, are always told and we hear about so much poverty struggle that we don't think we have anything. And the biggest shock is when I you know, let them know that we keep our money on an average of 6 hours after we receive it, right? So that's how long the Black dollar circulates in the Black community. And then I think that level of awareness provokes a different consciousness and responsibility in folks, because then you know, for me, our work is not just about empowering Black women to be like, we're strong and powerful, but to say, hey, we got some responsibility for how this this 60%, of the dollars we control, and a lot of it is leaving through our hands. So we've got to be aware of our spending habits, our character, just all of that, so that we're able to make different choices. And so those are the real big things that I see. And I see women shifting after that, but certainly those are the big points.
That budgeting piece that ties so deeply between Kenya and Trent, when you're talking about how do we get started, it feels like budgeting might be that first place that we get started in kind of assessing where our dollars are. How do you, either one of you, how do you get folks to really hone in on what they're really spending? Because we don't think so much about like that coffee or the hair weave or whatever it is.
Well, one of the things that can you hear me?
Yes, sir.
One of the things that I share when I, do a first-time homebuyers class is I talk about, go on your bank statements or your debit card and highlight the stuff that we spend, the silly stuff that we spend, and calculate that. Let's just use coffee as an example. I know people who go to Starbucks or Caribou every single day. So that's getting a $6 or $8 cup of coffee. So what I ask people to do is go on your bank statement and start highlighting. Some of the do you need to buy or spend $8 a day? $8 times, let's just keep it simple. $8 a day times 5. That's that's 40. That's $40 a week just on coffee. And if you just do the math and you start figuring out what you're paying for coffee, if that doesn't change your behavior, something has to trigger. Like I always joke and tell people, it's very rare, that I'll go to a Caribou or a Starbucks and buy a cup of coffee. And we have coffee at the office, and it's free. So, and we got all the flavors. We got toffee, we got roasted, we got all the good stuff. So why would I spend $6 to $8 a day on coffee? The other thing we have to think about too is lunch. How much are we spending daily on lunch? So you have to understand your behaviors before you can start making corrections. You got to start calculating and saying to yourself, whoa, I didn't realize, every single month, just based on, let's just call it 3 elements: lunch, coffee, and maybe, let's say, if we're going out or going to the bars or kicking it or what may have you, what we're spending, at these institutions. Now, I'm not saying, go cold turkey, and stop, but you got to ask yourself, when is enough enough? When I look at the housing percentages, for African Americans or the BIPOC community, let's just say for the city of Minneapolis, I believe last I checked was 23%. So, and I've been doing this business for over 20 years, and we've always been at the bottom. And,
what's changed, 1%?
Something out of it. One, maybe up or down, but it just seems like the needle doesn't move. But so we have to ask ourselves, how do we as a people move that needle? And in order for us to move that needle to increase our abilities to be homeowners, we have to cut down on the spending, And I just want to share this one little story. When I first got in this business 20-something years ago, he was an executive from BET, and he had came and spoke to us. And what Kenyatta was saying, where African-American women were 60%, this gentleman was saying the African-American population spending habits were even above that. And I can't remember the exact percentage number because it's been so long ago. But it just seems like nothing has changed. And in order for us to move the needle for home ownership, we got to make some changes within our own personal situations on how we're spending. And let's start asking ourselves, what's more important? I'll pick on the ladies with great apologies. What's more important, having multiple handbags or saving for a down payment?
Don't come at me. Don't come at me. Don't come at me.
More important, having 20 pair of Jordans, no disrespect to Michael Jordan, or saving for a down payment. Does all those Jordans build equity for you? Do all of those handbags build equity for you? Does that build generational wealth within our family structure? So these are just some questions we just have to start asking ourselves.
All right. So Kenya, let's do this. Let's come back to, okay, Trent, can I have you mute just so we can do the feedback piece here? Kenya, that shift in conversation, how you shift in empowerment based, like hearing what Trent is saying, right? He calling people out on shoes and purses, which I get. But we also have this piece, how you mentioned $1.4 trillion, but we're also, so we have that much Black buying power. We're influencers. They look to Black women for everything. Nielsen reports say up and down that they base trends off of us, what we're buying, what we're looking at in every single way, especially beauty. But then you see that it's going to take 200 years, and I'm hoping that she can hear me when it comes back up. It's going to take up to 200 on this. Okay, so we got you back, Kenya. I don't know. I know that it's a lot.
I don't know what happened. I apologize.
Okay.
I caught the beginning, but the end part, I heard a little bit, but if you could just summarize that last part for me, please.
Yeah. So, I'm talking about, this more than 200 years, 228 years that we reported 4 or 5 years ago that it would take for Blacks to catch up in wealth generation to our white counterparts. And this is despite us having this huge buying power base, in spite of us being influencers and people looking to us and for all of these buying decisions, we're still behind. So how do we shift that and use those numbers in a way that's empowering, and then that we have something to move forward to? Because right now it feels like ground zero for everyone, especially in the midst of the pandemic.
Yeah. The wealth gap really hadn't changed in over 60 years. And so, I mean, like very, very little percentage. So, and I want to say that while we do share responsibility, in how we spend our money and what we do, all of it isn't on us. We know there are a lot of systems that are still in place. Ain't too much changed about the behavior of the financial systems, all of the different things. And I think, so for me, our work is really seen and done through what we call financial trauma lens, recognizing and honoring the hundreds of years of financial trauma Black people have experienced from white systems and white people, white supremacy. There's been a lot of intentionality, and all of our economic progression has been met with white violence. There's a whole history. Ida B. Wells wrote about this a lot. The lynchings in the South, that was tied to Black men entrepreneurs. That wasn't just about, I don't like Black people. This was about beating us to a place of consumerism. So it's no mystery that we only keep money. This is what they demanded of us. We died, for white supremacy to rule us, for capitalism, right, to supreme over us. I mean, that's the whole thing. And that's part of why we also have a history of our economic leaders being assassinated. So understand that when you're working in a real place of economic progression for Black people, it's dangerous, for white capitalism. And so that's, to me, part of the bigger game we're dealing with. And we can beat ourselves to death about what we need to do all day long. But until we understand and deal with that systematically, we're going to always be met with a certain level of resistance for our economic freedom and stability and prosperity, which we must have. It is not compromisable. So I'm saying we got to get ready and stay ready and keep at whatever we're doing. I would say that recognizing that Black people are struggling with financial trauma makes sense to me. And I think we should be approaching us that way and helping us understand it systematically, but also individually for our own lives, and then helping us develop the right information we need and skills to build for the future. Some of us can do that and have done it successfully. I am proud of the many folks who have broken generational, traumas and challenges, of financial systems, right? Like us getting out of the banks and hiding our money because banks will steal our money, right? Taking our land. So, I mean, you get to a point where you just, I don't want to own anything. I don't want to do anything. White folks find a way to get at everything I have. And that's been our people experience. I just think we need to honor that and recognize that that our people are struggling from that. We talk about, post-traumatic stress, syndrome from slavery. We don't think there's an impact from the financial trauma, the challenges we've been through. Of course there is, from redlining to the Black Wall Street, from slavery, from all of that, because they were all economically based. And so for me, recognizing that is key to shifting how we think and what our behaviors are. Because if you don't know the past, you're going to repeat it in the future. So we've got to make sure our folks are aware of what happened and how we got here. We didn't just get here because we dumb, lazy people who don't care and don't know how to do nothing. That's not true. We have always strived. I mean, it's amazing that we're still here and that we're still striving. There's not another cultural group outside of white folks who have more infrastructure than us, period. From colleges, institutions we own, all the things we built. We need to give ourselves credit for that. So I talk to Black people about the history and the struggle and the stride of Black folks economically as part of how we inspire each other. I think that's extremely important because the damage we suffer is more psychological than anything. So we've got to go there to undo some of that. It's because it's mindset and behavior that then shows up in what we do.
So exploring just even a little bit more on that, we sometimes tend to laugh at like the Uncle Joes of the world who are putting their money underneath the mattress, but financial traumas present in other ways. Are there other like smaller ways that we just don't even think about that you see happening with women, like maybe how they purchase things or?
Yeah, when you get your money and splurge and you just buy everything because you used to not having nothing. Okay, so you get your money and then, you just go, you see it all the time. You see it with people scamming with money. All the time. It shows up in us splurging. It shows up in us. It shows up in a lot of ways. Shows up in us living above our means. When you go for without having for so long, when you just instantly want to have those things that you've never had. That's a sign of some trauma. You can talk about the budgeting and all of that. But sometimes, till you get that splurge up out of you, you're going to keep messing up your money. So to me, that's trauma. We need to address that. And not just through a budget, but understanding that it comes from a place of deficit, not having. Okay.
And so Trent, Kenya's going out. We're going to first of all just thank Kenya. She's in an airport right now. Her flight was late and she is still on this conversation because she is dedicated to the community, y'all. Just be clear about that. She is dedicated to the community. So if you have questions for her, drop them in. We're going to hope that we have her on for the whole show.
Yeah, I actually changed my flight today so I can stay here. I had a flight so I can be on here for some time. So I apologize. I know this is a little shabby, but this is what I could do. And I just wanted to at least be on here to give something. But my flight does leave in the next 10 minutes. So I got a few more minutes to be on here. Okay.
Well, look, we might just keep on asking you just a few more questions before you go. But so between the both of you, so we're looking at, talking about splurging and trauma. Taxes are like right around the corner for folks, or it might be yesterday, depending on whatever the new filing date was. And then we have a stimulus check that is set to come maybe in the next month or so. So that's going to be a lot of income, free cash in somebody's hand. How do you propose that we look at that as we try to get our financial house in order? You know what I mean? Like, what do you do with that money? How do you get people to make it work for them instead of just spending it?
Again, it comes to a personal choice, and just to add on to what Kenya was saying, earlier, and I totally agree with her. And we do have to understand the history. I think that's very important that we understand the history and what our ancestors went through, and our grandmothers and our uncles, and what they had to go through, and in all the things the barriers that they had to face for becoming homeowners, the redlining, the covenants, all of those things. We always need to remind our generation and our friends and our families of the history so we can be better today, so we can leave our kids something better for tomorrow. So our kids don't have to struggle and have to go through the same challenges that we're going through right now, and that our ancestors had to go through some it died, for freedom and financial freedom. So yes, the history is always important, and that should never be taken lightly. But when it comes to these stimulus checks, and based on you got to kind of look at again your own personal situation. So as Kenya said, we're spenders. So what are we going to do with that $1,400? Now we're going to take that $1,400, and are we going to go shopping, or are we going to go take that $1,400 or whatever we get weekly beyond that, and start looking at our debt position and seeing, okay, so I hadn't received any income. I know I got to live, but I also need to take care of some responsibilities as well. So, what is that? What decision do I make as an individual? Do I take care of that debt that I owe, or do I take the money and splurge? Again, it becomes a personal decision. But in order to move the needle, we have to make some changes, and that includes, in the finger points. You can't just point the finger at other people. You got to point the finger right back at yourself. So I can't tell somebody to make changes in their lifestyle so they can build equity or build wealth or what may have you if I'm not practicing it. So that's one of the things that I try to pride myself on is if I can ask somebody else to do it, I better be doing it myself. So I know it's a long-winded answer, but it's a decision. It's a decision. Again, we're just talking at the table. So.
I know, but I'm still gonna come back on this one because look, mute me for a second. So let's come back here. So let's come back here on this one. So I'm gonna get a few stacks in my house right now. It's gonna be in my bank account tomorrow. I'm not ready to purchase a house today. But I said I talked to you because I saw you talking to somebody else, and you made it sound real good. You made it sound real good in wealth, building wealth and all that good stuff. But I have no clue on how to start this. But I have money here. What am I supposed to do with that? Like, what percentage do I take towards bills? Because maybe I'm mostly caught up, but not all the way. How much do I need to put towards savings? How do I look at credit stuff first, things that are affecting and impacting my credit, or do I just go pay down debt? Like, how do I even begin? Because the money's burning and I'm still gonna buy me a purse. But what do I do with the rest of the money? I'm not even a person.
I would recommend, again, Stephanie, I would look at your balance, your credit line versus your balances. Okay, so let's just give you an example. Let's say if you got, we'll just keep the number simple. Let's just say you got $1,000 credit line at Target, and your balance is $800. So you got some stacks sitting up there. Let's say your credit score, let's say they're marginal. It's 640. 630, 640, but you need to get those credit scores and rise them up a little bit so you can be in a better position to be able to qualify for more product, and programs. My recommendation would be get that balance to 20%. You don't have to pay it off. You don't got to zero it out, but get it to 20%. So if and you still have activity, so that's going to increase your credit scores. And then you can still put money away. So you're not taking all of what you have and then tapping it into, and paying and cleaning out all of your debt. Because again, what generates a credit score is activity. It sounds kind of hypocritical because on one hand somebody says you should pay all your bills off and have a zero balance, and that's going to raise your credit scores. And then when they do that, then they check their credit score and they see, well, my scores didn't move at all. Well, again, the credit bureau can't report zero. It has to report activity. So if there's still a small balance at 20% of what your credit line is, then that's going to help increase your credit scores. Well, and what do you need for a down payment? Okay. So again, some people say you need 20%. No, you don't. You need 5%. No, you don't. You may need 3%. No, you don't. There's certain programs that are available to you as a first-time home buyer that you can put down as little. You're going to have your out-of-pocket expenses out of the gate. And those out-of-pocket expenses are your earnest money, your appraisal, and a home inspection. But if you have the strong credit scores, you can get into a program with down payment assistance, that's going to help you with your down payment with your down payment. And then if you're working with a good real estate agent is going to negotiate with the sellers to cover 3 to 4% of your closing costs. And there are also other down payment assistance programs out there that you can layer on top of the first down payment money you get. And it's kind of confusing, but this is one of the reasons why I say sit down with a loan officer and do a one-on-one consultation so you understand and know the different products and programs. So at the end of the day, Stefanata, you can buy a house with as little as $1,000 down and bring nothing to closing.
That's if you have good credit, right?
Okay. Credit is king. I'm not saying you can't get a loan or a home with a 640 credit score or a 650 credit score. I'm not saying that because there's still some dynamite programs at 640 and 650. But the point I want to make is you're limited. You're limited. So you might only have one or maybe two programs that you can qualify for. Why not qualify for the smorgasbord of products? So the higher your credit scores, the more options you have. Now you can qualify for FHA, Home Ready, an in-house bank portfolio product, a regular conventional program, Minnesota housing with down payment assistance. Now you can have access to other down payment assistance programs that are available in the city of Minneapolis. Believe it or not, there are cities that are offering down payment assistance. A lot of people don't know about this is because they're not sitting down and getting the full information from their loan officers because they don't know what questions to ask. And that's some of the things that we're trying to install, and people that are purchasing homes, especially in the BIPOC community, understand the power that you bring to the table. Because when you have knowledge and you can now ask that loan officer, hey, tell me about some of your other programs. Why are you just telling me about FHA? FHA is not a bad program, but is that the only program? I got a 750 credit score. Why are you only doing FHA? Tell me what else do you have? And if you can't help me, and if you can't talk to me about some of the other programs that I should be able to qualify for, I don't know if you're the right person for me.
Okay. So even on to that, right? So we've been at home for a year and some change, right? Online, on Facebook, we are seeing in all the groups, $60 to get your credit right. $100 and I can fix your credit score tomorrow and I can get you up 100 points. There are people right now asking this question. So I need to ask this. What do you say to that? Do you pay that $60, $100? Is that really going to get my credit score up? Or is it just a scam? And what do I really need to do to look at to get my credit score up? Because we keep saying credit is king, and somebody told me they can get all this off my credit report by next week.
Well, I'm gonna be very careful with how I answer that, and I'll answer it this way: you didn't destroy your credit overnight. You're not going to repair it overnight. So I honestly believe there are a number of nonprofit organizations that you can work with that will help guide you in getting your credit scores where you need to be without having to pay anybody any additional funds to rebuild your credit.
Okay. And we have Kenya, who is like, she's committed. She said, I'm on the plane and I'm going to try one more time to get one more good nugget in. So if you want to tap into this part of it, or if you have something else that you want to say before they take your phone away from you, that would be amazing. Kenya, can you hear me? She said credit is critical and key. So I don't think that she can get back on right now. But that's, so I just want to say thank you, Kenya, and safe journey on your flight, and just for your commitment to still get on here to be able to impart some words of wisdom. I will drop the link to the Black Women's Wealth Alliance into the comments before this end of the night. So, women in Minnesota, please, this is a great opportunity for you to get connected and to help build your credit, help build your business, help understand and build financial literacy and cultural wealth and generational wealth. And she's saying here in the notes that there's a science to credit and it must be built, repaired, and maintained, which goes right along with Trent, who said, look, it didn't happen overnight. You ain't gonna fix it overnight. So we just need to step away from those Facebook groups, y'all, when they're saying that. Be clear that it's a journey. everything in this process right now is a journey for your financial freedom, including your credit. So I would say, Trent, then understanding, so we're trying to get from you said a 650 to a 750 to get a better rate. What are some of the key? Okay, I'm paying down my debt, but just paying down my debt isn't going to get it. Otherwise, a lot of people would already be at a 750. What is it? What does that look like? Is it a consistency? Is there like a method to how we do it?
Yeah, it's like what Kenya was saying. Credit, there's a science. There's a science to it. So that's why I was saying you still have to have activity, keeping your balances at 20%. Some people say 30%. I say I'm saying 20% of your credit line. Again, so if you have a credit line of $1,000, keep your balance at around 20%. You got to have activity. Watch on opening up new accounts. So new accounts, it gives you a hard hit. That's an inquiry. So the more inquiries you have can also bring your credit scores down. So when someone is looking to purchase within the game to buy a house, and let's say they're trying to make a decision, should I buy a car first or should I buy a house? But sometimes people will choose to buy the car, and then when they have their credit pulled from a lender, their credit scores are much lower because of all the inquiries that they've gotten from the car dealership. So because of the inquiries, history, how long you've owned an account. The longer you've owned an account, the points you're going to get points. Based on owning the account. So so it's activity. It's the life of the account, and then maintaining that account and keeping those balances at 20% based on the credit line. I say it a number of times because I want that 20% to really get measured in people's, in their thinking mentality, because it ain't about opening up. I just give you an example from my own personal self, where I had a number of different credit cards as a young man, thinking this was going to help my credit scores. I mean, I had multiple visas and department store cards. I mean, it was just a matter of time. I was robbing Peter to save Paul. So the limit of debt that you have too, because how many revolving cards do you need? And then you got to compound that with student loans and some of the other things that that we get. So it's about keeping that discipline and keeping it limited, but maintaining it. Again, it's a science, as Kenya said.
Got you. Let's get Kenya. I know she's about to take off on this flight here, and I know you're able to give us some parting words before they take your phone. I just saw that.
Yeah. So I'm getting ready to
never mind.
All right. Thank you though.
Okay, well, thank you so much, Kenya. Safe journey and safe flight. But she did add some words in our notes here. We're doing this live, y'all. This is how life happens right now in the day of COVID and separated lives. But so Trent, you going on this one. So like we got the 20%. We understand that. There's the paying down, but still using your credit as a way to show that you're able to pretty much take money and give it back. That's what it really sounds like to me.
Yeah, and let's look at it this way. Why was credit established? What was it created for? To buy goods today to pay them later, because we may not have had the money at the time when we're charging these goods. But the way they market credit now, the way they make credit sound like it's, it has become a society thing here. It has become a way of prestige, the type of credit that you have or the type of card that you have. Do you have a blue card, or do you have the gold card? Do you have a black card? I mean, credit has been commercialized, as a status. And I think that's where we really get in trouble at. Because we all want to have this blue card. Let's look at the commercials. Samuel L. Jackson. What's in your wallet? You got Kevin Hart earning earning. So we have made credit a way of everyday living, and that's not how credit was introduced. You know, credit wasn't introduced for us to use it for everyday living. And then you also hear people say, well, I get points. You know, I'm getting points for when I use my credit card. I get points for this, or I get points for that. You know, or, you know, remember Capital One had their campaign, you know, putting money back in your pocket. You know, one of the questions I always ask, and I'll ask anybody who's listening on this call, and maybe you have, and maybe you haven't, I don't know, but has Capital One ever sent you a check? That's something to think about. And or you hear, well, I get it.
Gift cards. You get gift cards. You do get gift cards.
Okay, well, but look at the amount of that gift card that they sent you.
Right,
and
based on your spending.
What did it cost you to get that gift card? Or, you know, the other one I hear a lot too is, well, you know, we got discounts on our airline tickets. Okay. Did you get first class?
Okay.
You know, so again, it's how we use it, how we utilize it, and how we manage it. We just need to use credit because it is that credit score is it is the measurement stick now.
So then where do we go? Where do we go in order to I mean, this is a lot of high level talk, right? It sounds really good. I'm going to get my credit together. And then we turn this off and they're going to be like, now what? Well, let me go buy this real quick because I know I can do. Where do we go? Do you have access to a program? How do we, and I'm going to need you to mute this, how do we find this way that we can, how do we start? That's always going to be my question. Like, how do we start? Where do we go from here? When we get off of this, what does this really look like? So it's not just a bunch of numbers. And how do we know what my credit looks like?
Yeah, and I want to answer that. Where do we start? Because there's a number of nonprofit organizations that are out there. That's one. Number two, the other thing I wanted to say when I was saying credit is a measurement. It's a measurement. It's a measurement. That score is a measurement of getting a job now. You know, maintaining and managing your credit can have an effect on you getting hired from a company. That credit score can have an effect on your homeowner's insurance premium. That credit score has an effect now, today, on our everyday living in our lives because it has such an impact. So where does it start? Where does it start? It starts with you. That's where it starts at. It starts with you. And the question you have to ask yourself is, I want to make changes. I cannot continue to be in this environment. I cannot continue to live and be house debt, just be overwhelmed in debt. I can't keep doing this. Something has to change. So number two, pick up the phone, call one of the nonprofit partners, Urban League Twin Cities, PPL, Project Pride and Living, PRG, the Powderhorn Group, NIDA over in St. Paul. There are a number of nonprofit, and there's many more organizations out there that you have housing counselors just waiting to sit down with you and and start talking to you about those changes and making making those new changes to start your journey, whether it be home ownership, whether if the journey is, hey, let me get my credit scores up first. Number two, let me start saving. Number three, then I go for my, to start planning on being a homeowner. These individuals at these nonprofit organizations are at your guys' fingertips. Take advantage. And not only that, you would have loan officers, that are all about, or financial advisors that are working in the institutions, that aren't just about just getting the paycheck.
How do you know how to find a proper because you've mentioned this part a few times now. How do you know how to find a financial advisor? Like I walk in a room and he's sitting in a bank and he should be the professional. He should be the expert. How do I know that there is someone that's not? or how do I know that someone is good? One, and then two, I want to come also to, you talked about, so there's building my credit and then there's saving. But I feel like in this piece, when we're talking about building credit, we're also talking about really debt reduction so that you can start saving, right? So if we're doing debt reduction, I know Polly just mentioned this question about debt stacking. I know there's debt snowballing and debt stacking, where one looks at interest rate and one looks at balance. Do you have a preference on those, on how we approach paying down our debt? So it's a two-part.
Well, you know what? Actually, I love the question because that's one of the things that I talk about. You know, if I'm doing a consultation or even if I'm teaching a class, it's one debt at a time. One debt at a time. See, I think what happens, we start to get overwhelmed, right? So we have, let's just say we've got $7,000 in debt, and let's just assume none of our debt is in collection. It's just our normal everyday debt. We have $7,000 in debt. I'm maxed out on my credit lines, and I'm just making minimum payments. So I got to make a decision. I got to say to myself, okay, let me just focus on one credit card.
So then do I go with the one with the lowest rate, or do I go with the lowest balance? Because that's the question.
And what I would recommend, you go with the one with the highest balance with the highest interest rate, because that's the one you want to get off your books the quickest. And take that one credit card and pay that down, get it down to your 20%. That's a victory.
So you would do the $20,000 card before you do the $2,000 card?
No, I would do the $20,000 credit card.
That's what I'm saying. You would do the $20,000 card.
Because the $20,000 revolving credit card, your interest is much higher on that. On a $20,000 car, your payment is the same. If your payment is $350 on a $20,000 car, it's $350. On a $20,000 revolving credit card, that minimum payment is going to start fluctuating because you got to stop using it first and foremost. You got to stop using it. Then you got to start paying down on it and getting it down to a manageable balance so you can get that victory. So once you have done that, then you go to the next credit card. And I'm going to do this. I'm going to take that same behavior and I'm going to get that balance down to 20%. You see where I'm going here? And it just keeps getting down and down and down and getting them to 20%. And sometimes if you can pay one off and have a zero balance, you can do that as well. But remember, you still got to have activity to keep the balances up. So if you start focusing on just getting a win, get that first win, using a sports metaphor, because we all know winning is contagious. And when you start getting wins, you start feeling good about yourself. You start feeling good about your progress and the things that you're doing. And the next thing you know, after a matter of time, and again, it's about patience, because it's a journey. It is a journey and patience. And the next thing you know, let's say a year, wow, look at your accomplishments. And you cannot allow yourself to get sidebarred, because again, in order to bring the balances down, what do we have to stop doing? We got to stop using them. But we can only do one credit card at a time.
You're going to have to make this make sense to me, though, because you said do the $20,000 card before I do a $2,000 card. And I'm asking this because
I thought you said a $20,000 card.
Like, no, like a 20 grand versus, $2 grand, right? And I'm asking that because if I have 4 cards and, I'm doing the minimums on all 4.
Right.
And then I'm putting my extra on the 4th, right? If I can pay down the smaller one first, wouldn't I technically have more money then to put into the others?
Right. I'm sorry. I thought, Stephanie, I thought you said a $20,000 car. Like a vehicle.
Oh, because I was like, you got to make it make sense. Okay.
That's why I thought you said a vehicle. Okay,
no, not a vehicle. We talking about two plastics.
That's why I was giving the difference between the two payments, because on a $20,000 car, that's an installment debt. So that monthly payment stays the same. And that's why I said versus a $20,000 credit card debt, because that minimum payment is going to fluctuate. It's going to go up and down. based on the activity. Now, to answer your question, if you have 4 credit cards,
not cars. Now we're not doing a 3-car garage. We're talking about credit. Yeah,
4 credit cards, and your highest balance is 2,000. You said.
Well, if your highest is 20 and your lowest is 2.
I'm still going to focus on the higher one. Because you know with the $2,000 one, I mean, you can get it to 20%. Sure, you can. But that higher balance is the one that is probably keeping your credit scores down because if you're maxed out on it. So if you've got a $20,000 credit line and your balance is $19,000. That $2,000, let's say if you got a $2,000 credit line and the balance is $1,000, that $1,000 credit line is not what's keeping your credit scores low. That $20,000 credit line with that $19,000 balance is what's keeping your scores down. So yeah, I'm going to chip away at that bigger balance and still try to maintain the smaller ones and not get overwhelmed with those ones either. Again, it's a science. But there's discipline behind that science.
Okay. That's we're gonna write it down and figure it out and get to this next thing. We have a couple more minutes here on talking about how we get our financial house in order. And I know with you, we've been talking about how you get a house to get your financials in order in terms of the money matters, right? So, we have some of the lowest rates ever still.
Mm-hmm.
What are some real things we can do now? We get some money, we start budgeting, we start saving to build our credit score. What else is in this process? What does that really look like to get ready to be in a place for homeownership?
I think I think it's all about you take care of the credit and you get your credit scores up. And then you still want to come to the table with reserves and have some assets. Do you need a lot of assets? I'm not going to sit up here and tell everybody you need to have $10,000 in order to buy a house, because we all know that's not true. But you still need to have something in your savings account, and then you need to have a good job history. Stability, income. Yes, rates are still wrong. But the challenge is, Stefanetta, it's the inventory. The inventory is tough, because, again, you got all these offers, that are going in, multiple offers. You got houses being listed at 200,000, but they're not even accepting 200,000 offers. They're accepting $230,000 offers on a house that's listed for 200,000. Somebody please explain to me how that works. And then are these houses appraising for $30,000 above the listing price? So that's another conversation we can have. I want to call that a coming attraction, because I'm still trying to figure that out. But for sake of time and for the potential home buyers out there, it just comes down to credit is king. I'm going to stress that. That's I know. I could have debates with other individuals about that. And I'm open to it. We can always have more conversation about it. Job stability, that's key. Making trying to earn something to be able to purchase the home you can afford. That's that dream home, and then having some assets. And working with a good team. Working with a good lender. A lender who has your best interest and who wants to build a relationship with you. Working with that outstanding real estate agent, that also wants to build a relationship with you, and everybody working together as a team. So you can, because at the end of the day, we all work for that consumer. It's not the other way around. I mean, I think we get it twisted, where everybody thinks the consumers think, well, I need that loan officer or I need that real estate agent. But at the end of the day, you have the power, but you need to understand the questions to ask so you can take that power and use it to your advantage. So utilize the nonprofit organizations that are out there, to the home ownership center, reach out to the PPLs and the PRGs and the urban leagues, reach out to these organizations because they have professional individuals that want to help. We all want to build and bridge this gap and close that disparity of home ownership for people of color. It's a must. We must do it. So to continue to remember the history, we have to remember the history, but we also have to be better today, so we can leave our kids something better tomorrow, so they don't have to go through the same challenges that we're going through today.
Okay. Thank you so much. I'm going to ask one question, give you 30 seconds on this real quick, maybe 60, on market, because we're talking saving, budgeting, getting our credit together. You vice president of a bank, so I know credit is king for you, right? Because you know where the dollars go. You know where the money resides. You are where the money resides. But we also have this conversation about investing, especially now that we've been home and there's apps now that make it much easier, where you don't have to buy 1,000 shares. You can buy one share. How do you see that playing a role in advance of home ownership, or is that something that you do once everything else is together in terms of getting into the market or looking in long-term investing, like, mutual funds or equity, because everyone doesn't have a job that gives them a 401k. So I want to hear you, though. I got to hear you, bruh.
Well, sorry about that. There are other ways that you can build equity and build wealth, not equity, but build wealth outside of home ownership. And I'm not a financial advisor,
right?
But there are other means like IRAs, CDs, money market, accounts. There are good financial advisors out there that are I know our community, a lot of our community, we don't trust banks. I was one of those folks, didn't trust banks, and as I got older and started working in the banks, there are some advantages, that bankers can give you, and there's some positive and solid resources that you can take advantage of by working and listening to a financial advisor and seeing some of the programs that are available where you can help build and grow some money, grow your money. I have a couple of buddies, that have invested in stock, and they're doing very well. I mean, I'll end it on this. I have money in a mutual in an IRA, and when the pandemic kicked in, I was gonna pull that money out. And my friends like, man, don't you touch that money. And not only did I get back what was lost, I added some more into it. So there are other means of earning earning wealth outside of home ownership. But again, that's a question for a good financial advisor, when it comes to the stock market and those resources.
Okay. Well, thank you so much, Trent. I appreciate this conversation and us getting really into this. This is how we get into it, on really talking about what it means to get our financial house in order. I want to thank everyone who was joined in this conversation online with us, as we talked about how we shift our focus, how we shift our perspective on finances. And I love what Kenya McKnight-Ahad, founder of Black Women's Wealth Alliance, said earlier in terms of this financial trauma, that we really need to be okay with it, viewing things through a financial trauma lens, that we have been hurt, we have been left in certain ways and left behind because of this, and being able to be okay with exploring how we come back to wholeness. And part of that wholeness, with Trent on his side, is going to be home ownership. So I definitely appreciate that. We will be we will drop some links in the comments so that you can connect with Trent, so you can connect with Kenya, and so you can connect with resources that can get you to people who are financial advisors, people who are loan experts, people who can move you forward and move your needle forward on what it takes for you to become whole and successful and wealthy and build wealth generation for you. So thank you so much, Stephanetta Harmon with the MSR ForeFront. And I want to say thank you again to Trent Bowman, Vice President of MidWestOne Bank. Say it right.
MidWestOne Bank.
Thank you. I can like MidWestOne Bank. Thank you.
It's Vice President CRA Business Development. So I like to tell everyone I'm in the CRA business.
Okay. See, look, extra titles. There we go. So yes, thank you so much, and thank you everyone for tuning in. If you have any other questions, please drop them in the comments for Trent, and we will get back to you as soon as we can. Thank you so much. Have an amazing evening.